Hello everyone and welcome to another daily technical video guys. This time around we're gonna take a look at the US dollar index. The technical day for today is for Thursday, September 15. So we're gonna start with the US dollar index. We covered today this part here in a dollar index video. Now we're gonna take a look at the 8-hour chart. Now, on the 8-hour chart, the US dollar index, as you guys know, in the weekly charts needs to go higher. Now, if this is the bottom, which is the B wave, or this is C, but at the same time is a B in a higher degree, is a B. So technically speaking, we're going higher. How are we going higher? It looks like it's gonna go like the euro. It's going lower in like the way of the triple zigzag or double zigzag, something like that. So maybe what we have right now is A, B, Z, this is W, and then we got the triangle S wave, and then now with this move higher, we just ended, because this, I've been telling you guys, this is only one cycle. It's only one cycle. I cannot subdivide this into like maybe the euro is possible. Maybe this is only one cycle. So that being the case, the alternative for the euro count is that the whole move for 145.40 is only one move, which is A of the next move down that is gonna take the dollar to around the euro dollar to 129. So that being the case here in the US dollar index, we should expect 3 ways back to around 75.15, 75.50 area. Around this area is there. I always identify a high when I'm doing the corrective move, and for me this top of the triangle here, which is 75.41, can be the case. Of course, what we need to do is wait for the H to end, sell the B, and then buy the C. That's very simple. Or you guys know the structure here. We need to wait for the structure 214 that we are expecting tomorrow, US dollar index, and then for Sunday or Tuesday, we're gonna see a dollar strength, and then the dollar is gonna set off again. But this is the count that we're gonna go. I really like this count. You guys know that we presented this count about, I would say, 14 days ago. So that's for the dollar, guys. Now going back, we're gonna go now. Okay, now let's take a look to the other index. The other index is the euro index. Like you guys know, is A, B, C, W, S, Y, S, and then right here we got the Z wave. So where should we go? We should go to this area around, like we say, the 110 area. In 3 ways we should go there. So technically speaking, what we're gonna see is something like this in the euro index, very similar to what we're gonna see in the dollar index. We're gonna see something like, sorry, my bad, let me erase it here. Something that is gonna take this index to around this area, and then which fibber we need to trace? I believe that we need to trace this fibber, and then around this area, which is 109.90. But you see that channel there, right? Those are regression channels, and those channels, maybe it's gonna bounce a little bit right there, but at the end of the day, I believe that around those channels, around 109.45, 110, which is around 141, 142 and a half, we should get the dollar move the lower, and the dollar should get, and the the index should start trading lower. So that's about the 2 index. So technically the 2 index, they're matching perfectly right there. The dollar index should trade lower, the euro index should trade higher. Having said that, let's move on pretty fast. Okay guys, now let's start with the individual pairs pretty fast. The individual pairs, we're going to start with the euro dollar. The euro dollar, we have 2 counts. The first one is the one that called for the correction now coming from this whole move, and that goes pretty well with what we're expecting out of the euro index. Now, because this high is the 149.40 right here, is the high on May that the euro index did. Now, the second scenario is that we got ABC, this is W, ABC, let me see, W, S, Y, S, and now instead of B, this, I'm sorry, my bad, instead of this big W on higher or Y or higher degree, the other scenario is that you move this W here, you move this S right here, and then you move this Y right here, and then this become W. And then now what you're gonna correct, this become W, and then this S become this S, and now what you're gonna correct is, and then now, sorry, I'm changing everything. At the end, it's almost the same result. It's the dollar bearish, but it makes, I would say, a little more sense with the dollar index, and that's the case where we are right now. We are in this way, and then that being the case, the levels that we need to watch is 140.28 should be a heck of a sell right here, back, and then getting back to 141.50 or 143 in extension. It can be both way. Now, the best way to let you know which way is when the A way ends. That's when it's gonna pause. It's gonna tell you which way we go. I like this scenario because it goes better with the dollar index. The other one goes better with the euro index. So we need to play out with the market correlation, and then going back to Aussie, going back to the Aussie dollar right here, is telling me that most likely the scenario that we're gonna see is the second one, because the dip of the correction is not that big like the previous one. The same with New Zealand. If we take a look at New Zealand, guess what? I think that the best count that we can label right now is that the New Zealand, I'm sorry, is gonna trade higher to around this level to end a possible ABZW. This is S, and going higher right here to trade and then prunk to the downside. Another correlation that is telling me that is the second scenario on the dollar or on the euro dollar is the S&P, because technically the S&P, what do you need? WSY. Doesn't that look familiar? Like 140, 141 and a half, 142 top is gonna make the case. I agree. Great rhythm between other markets. Another thing that is pointing out about that is gold. And gold, I told you guys the other day, gold is a symbol, is seen as a risk aversion. Guess what? This move on the D way in gold is gonna be risk aversion. You know when you're gonna start buying the dollar? When gold hit 1754. Then this is gonna make the B way on the dollar. In other words, the dollar is gonna get strong here. The E way, the dollar is gonna get weak here, and then the dollar is gonna sprout in the risk aversion to the outside when it's gonna take the euro around 130 area. You see, guys, how everything fit. So my best advice is, all you guys can watch the seminars. They are very deep. I love having many good waivers on the seminar. People that know Elliott Wave, and they can test me and they can ask questions, deep questions. But we love that because we like that. You guys get better and we get better too. So I believe that the trade is as follows. I believe that the dollar is not done with the weakness in the A legs. After that, the dollar is gonna get sore is gonna get bought, in 3 ways, and then the dollar is gonna be sold again in 5 ways, and then the dollar is gonna become king, and the euro dollar that all you guys like is gonna get to 110. But it's gonna take a while. But the market have a great rhythm in the dailies and weekly charts. Great thing, and everything is pointing out that there's gonna be a crash, like we've been forecasting for a while now. Finally, let's take a look at the euro dollar, because I know you guys love that pair. In a 1 hour, in a 1 hour on the euro dollar, guys, I'm sorry, I put the 8. 1 second, guys, my bad. We got 2 scenarios on the euro dollar. Remember, the move in the dollar or in the euro do not have to be in 5 ways. So our first scenario is this one. Both scenarios are presented on the servers. The first one is calling like a type of flat wave A, when you got a B, and then 1 2 1 2 3 4. And that's gonna take the dollar in the first leg to around 140 140.20 area, and then from there it's gonna go lower. That's a flat. The second scenario on the euro dollar is, where is it? Is the one that calling for the leading diagonal, and then that scenario is right here. That scenario is a 3-way move to the outside, when you have 1 2 3 4 and a 5. That's A, and then you got a B, and then around 140 41, which is the 61A, the 1.61A of the first leg. You should be, and with the next high also, you should be ending this move, and then the dollar is gonna get strong. So guys, let's keep it there. In that case, this is gonna be W, and then you're gonna get 3 backs, and then you're gonna go higher. That's how I see it. I believe that the path is as clear as water. The path is as clear as water, and we should have very exciting swing trades. We're probably gonna send one, but I don't want to fade the dollar index. I would rather wait for the A wave to develop and then sell the B wave to get the C better than faded. So tonight there won't be no trade. We're gonna wait. We like the Aussie short, maybe New Zealand long, but I don't see in the 1 hour chart. I don't see like too many sync, because the market is turning. I see that the cable is lagging behind the risk trade, but eventually everyone is going to cash out and the turn is going to happen. So let's leave it there. Get back to you guys later.